Hello everyone, welcome back. In this video, we will solve a problem under the head Profits and Gains of Business or Profession. This is the problem that we will be solving. Please freeze the screen and write down the problem so that you can solve it along with me for better understanding. Okay, let us solve the problem. We start with net profits as per profit and loss account. Net profits as per profit and loss account is 2,58,000. Then what do? We add. What are the things that we add? One is expenses not allowed but already debited to P&L account. Okay. Then the other thing is incomes allowed but not credited to P&L account. These are the items that we are going to add. Then there are some items which we are going to deduct, which are the ones expenses allowed but not debited to P&L account. To understand the logic between adding and deducting, please refer to the other videos in this series where we have discussed the provisions, theoretical provisions. Okay. There is one more item that we need to deduct, that is incomes not allowed but already credited to P&L account. So these are the items that we are going to deduct. Okay. And then we also have to take into consideration undervaluation and overvaluation of stock. We will do it a little later. Coming to expenses not allowed but debited to P&L account. Where will you find these items? It is already debited to P&L account. So you have to refer the debit side of P&L account. This is where the information relating to these items will be available. So you have to refer to the debit side of P&L account. Let us quickly go ahead and check opening stock. Opening stock. Any stock is related to business. As such, it is an allowable expenditure. But one thing we need to remember, along with this, we need to see whether there are any adjustments relating to these items. Okay, so we have adjustment relating to stock. The fifth adjustment, stock is undervalued by 10%. So let us mark it over here. So we do have a adjustment. So let us write over here, we do have an adjustment. This is relating to adjustment number 5. Okay. And then coming to purchases. Purchases is an allowable expenditure. Okay, it is related to business. You purchase raw materials, etc. As such, it is allowable. Do you have any adjustments relating to purchases? First one is interest on loan. This talks about bad debts. This is contribution to URPF. This is legal expenses, stock, gift, customs duty, uh, embezzlement of cash, traveling expenses, rent, and then adjustment relating to general expenses. So we don't have any adjustment relating to purchases. As such, it is an allowable expenditure because purchases of raw materials, etc., which is related to business. Coming to salaries, again, it is an allowable expenditure because salaries you paid to the employees and there are no adjustments relating to salaries. So it is a fully allowable expenditure. Next is legal expenses. Per se, legal expenses are allowed because business will have to spend money for legal charges. Maybe or for recovery of bad debts they have to file a case, or maybe for litigation, maybe for defending a contract, etc. Okay, for various reasons the business will have to go ahead and spend money on legal charges. So legal expenses are allowed expenditure. So the adjustment relating to legal expenses are: legal expenses include rupees 2000 paid for preparation of income tax return. Income tax return is a personal expenditure of the businessman. As such, it is not allowed. Let us go and check whether legal expenses for preparation of income tax, whether it is allowed or not. Okay. The 19th point. Legal expenses in respect of income tax matters, whether to an employee or an outside person. Whether you're paying these legal expenses to the employee of the business or to outside person for filing income tax appeal, preparation of income tax returns, or giving tax advice is an allowable expenditure. Okay, so even though income tax is not allowed because it's a personal expense of the businessman, any amount paid as legal expenses is an allowed expenses. As such, this is allowed. Then coming to bad debts, business definitely will have bad debts. Okay, as such, this is a allowable expenditure. Okay, bad debts is a part and parcel of business because at times there are chances that the customer may not make the payments. Okay, it is an allowable expenditure. Is there an adjustment to bad debts? Yes, over here. During the previous year 2016-17, SSC had claimed 45,000 as bad debt. So he had claimed 45,000 as bad debt in the year 16-17. But according to income tax rules, only 35,000 was allowed to be treated as bad debts. Now, in the previous year, in this relevant previous year, he recovers rupees 25,000. What he thought was supposed to be a bad debt, he recovers it in this year. As such, this is recovery means it is an income. Money comes in. Okay. As such, this turns out to be an income which is not credited to P&L account. You cannot see, this is the credit side of the profit and loss account, and you don't find any items related to bad debt recovery. Okay, as such, it is an allowable expenditure income. Sorry, it is not an expenditure. It is an allowable income, but it is not taken in the profit and loss account. So where will we write this? It will be incomes allowed but not credited to P&L account. Okay, incomes allowed but not credited to P&L account. So recovery of bad debts. Okay. So how much amount is recovered? The amount that is recovered is rupees 25,000. He recovers rupees 25,000 as uh, that he has treated as bad debts. As such, this amount will be income allowed but not credited to P&L account. Moving ahead, rent. Rent is anything, rent is related to business. As such, it is an allowable expense. It can be rent for premises, office premises, etc. Nothing is mentioned. So you take it as uh, an expense which is related to business. Interest on loan. Any loan taken for business and interest paid on that is an allowable expenditure. Okay, because the loan is taken for the business and interest on loan is for business, it's an allowable expenditure. But we have a adjustment to it. What's the adjustment? Interest on loan is paid to brother of Sri Rahul for loan taken for payment of advance income tax. This is a case of loan taken for personal reasons and not for business reasons. Okay, because this loan is taken for the purpose, main intention of paying advance income tax. As such, it is not allowed. Okay, if it was an interest on loan for business purpose, then it is allowed. So it is an expense not allowed but debited to P&L account. uh, Amount is 2,500. Then depreciation. Depreciation is an allowable expenditure. Depreciation is for the wear and tear of the machine, use of the machine, use of various assets. As such, it is an allowable expenditure. Is there any adjustment relating to depreciation? No adjustment. As such, it is an allowable expenditure. Income tax paid. Now, income sales tax is related to business. As such, it is allowed. Income tax is not related to business. It is a personal tax that has to be paid by the businessman for his personal income. As such, it is not allowed. Okay. As such, this will not be allowed. and income tax paid amount is 2000 rupees. The next one is outstanding customs duty. Now, outstanding customs duty is an allowable expenditure. Okay, but it has to be paid within the due date. Let me take you to the provisions relating to outstanding customs duty. Okay, what's mentioned? Only the amount of any business expenses paid on or before the date of filing of income tax returns. Last date of filing of returns is 30th September. If it is paid on or before the date of filing, it is an allowed expenditure. Anything that is paid after that is a disallowed business expenditure. Let us find out quickly whether the outstanding customs duty mentioned over here, whether it is paid within the date of filing of returns. Is there any adjustment? Yes. So this is the adjustment. Outstanding customs duty has been paid on 31st December 2021. It has to be paid before 30th September. As such, this is not allowed. If it was paid before 30th September, it is allowed. Okay. Since it is paid after the filing of returns, it is not allowed. So paid after the due date of filing returns, as such not allowed. This is applicable to all types of expenditure of the business. Amount is 25,000. The next is advertisements. Advertisements are relating to business, as such it is allowed. Is there any adjustment for advertisement? No adjustments for advertisements, as such it is rated for business. Office expenses, again office expenses are related to business, as such it is an allowed expenditure. Do we have any adjustment for office expenses? Nothing is mentioned, as such there is no adjustment, it's a allowed expenditure. Contribution towards unrecognized provident fund. There is an adjustment for unrecognized provident fund over here. Contribution towards unrecognized provident fund was paid within the time, that is before the due date of filing returns. But remember, contribution for recognized provident fund is an allowable expenditure. Contribution towards unrecognized provident fund is not an allowable expenditure. Again, quickly let me take you to the provisions. Okay, so over here, employer's contribution to recognized provident fund and approved superannuation fund is allowable expenditure, and actual expenditure incurred will be the quantum of deduction available to all types of assessees. But in this case, it is not for recognized provident fund, it is for unrecognized provident fund. As such, it is not allowed, even though it is paid within the date of filing the returns. Not allowed. Amount is 5,000. The next is general expenses. General expenses is relating to business, as such it is allowed, but there is an adjustment. There are two adjustments in fact. So what is mentioned? Uh, General expenses, salary of rupees 1,200 paid to domestic servant. Domestic servant means his personal mate at home, and it is not allowed. Okay? So salary paid to domestic servant not allowed. Amount is rupees 1,200. To that extent, it is not allowed, and it is already debited to P&L account. Then what is the second one? General expenses also include compensation of rupees 2,000 paid for retrenchment of an employee. Any compensation paid for retrenchment of an employee is an allowable expenditure. Let me again quickly take you to the provision. So the provision is given in point 21. So compensation paid to an employee while terminating his service in the business interest. This is an allowable expenditure. The next is, so we are done with general expenses. Next, traveling expenses. So traveling expenses, definitely any expenses paid for the employee or employer for traveling for business purposes, an allowable expenditure. So whether there is any adjustment relating to traveling expenses. Ninth adjustment. Traveling expenses include rupees 50,000 being cost of the trip to Singapore by an employee for 10 days. Okay, so 50,000 was given to the employee for business trip to Singapore for 10 days. However, only 8 days of trip is useful to business and 2 days has been allowed as holiday to employee. Now, even though it looks as if it is not related to the business, it is an allowable expenditure. This is because this so actually the number of days it was decided was 10 days and 50,000 was rupees given to him, but he has finished his trip by 8 days, which was for business, and the 2 days he is staying as a holiday, and it has been allowed as holiday to the employer has given this provision. As such, it will be treated as staff welfare expenditure. Okay, since it is treated as staff welfare expenditure, it will be an allowed expenditure, even though those 2 days were not for business related. I think we missed on one adjustment, the rent. There was an adjustment for rent as well over here. Okay, the rent adjustment is rent includes expenditure on extension of shed on rented building rupees 26,000. However, such extension was completed on 1/5/2021 with total cost of rupees 50,000. So whatever the rent amount has been mentioned, it also includes expenditure on extension of shed. Now, extension of shed is a capital expenditure. It is not a revenue expenditure. Okay, extension of shed on rented building is a capital expenditure and it is not a revenue expenditure. As such, it is not allowed. We will enter this rent. The expenditure on extension of shed on rented building is a capital expenditure, hence it is not allowed. Okay, amount is rupees 26,000. Now let us add all these things. Okay, this total will be rupees 61,700, and if you add the 61,700 to 2,58,000, we will get 3,19,700. Now let us go ahead and check the incomes which are allowed but not credited to P&L account. So you don't find these items in on the credit side of the P&L account. So where do you have to refer to these items? We have to refer the adjustment. So let's quickly go through the adjustments and find out whether there are any incomes which are allowed but not credited to P&L account. First one is in relation to interest on loan. It's an expenditure. Second is bad debt. Again, recovery of bad debts. This is an income which is not entered on the credit side of the profit and loss account, which you have already mentioned. Okay, so this is already taken into consideration. Third is contribution towards unrecognized burden fund. Expense we have considered. Legal expenses considered. Stock we will take it a little later. Gift received was given by a supplier for achieving target sale. Anyways, this gift received is already entered on the credit side of P&L account. What are we looking for? Incomes allowed but not credited. So since it is already credited, it is not in the purview of this calculation. Okay. The next is outstanding customs duty. This is an expense, not an income. During the previous year, he comes to know that his former employee had embezzled cash. Now, this is again a loss. As such, it is not a income. Traveling expenses, again expense, not an income. Rent expense, not an income. General expenses is also an expense, not an income. So there are no items except for recovery of bad debts. There is no other item. So this 25,000 needs to be added to the above figure. Now that will be 3,19,700 plus 25,000. 3,44,700. Okay. Moving ahead, let us look into the expenses that are allowed but not debited to P&L account. Not debited to P&L account means you will find these again in the adjustments only. Let us quickly go through the problem and find out whether there are any expenses that are allowed but not debited to P&L account. We have one such expense, that is embezzlement of cash. The eighth one. During the previous year, he comes to know that his former employee had embezzled cash of rupees 5,000 on 31/3/2020, which was not accounted for. So, any amount that is cash embezzled by the employee is an allowable expenditure. Okay, let me take you to the provisions quickly over here. Loss of cash by an employee through embezzlement is an allowable expenditure. Okay, since it is an allowable expenditure, we need to account for it. Whether it has been entered on the debit side of the P&L account, no. Okay, as such, it is an expense which is allowed but not debited to P&L account. Embezzlement of cash by an employee. Amount is rupees 5,000. Okay. So there are no other expenses which are allowed but not debited to P&L account. As such, this will be deducted 5,000. Then coming to incomes not allowed but credited to P&L account. Incomes not allowed but credited to P&L account means which side you have to, where do you find this information? This information will be provided on the credit side of the P&L account. So look into the credit side of P&L account. This is where you will get the information relating to any incomes which are not allowed but credited to P&L account. Okay. On the credit side of profit and loss account, we have sales, which is relating to business. As such, it is an allowed income. Profit on sale of import license. So let us quickly find out whether profit on sale of import license is an allowed income or not. Section 28, subsection 3A. Profit on sale of a license which is granted under the Imports Order of 1955 is an income that is chargeable to tax under this head. As such, it is an allowed income. It is accepted as such, it is a allowed income. It is accepted as a business income. Okay, so profit on sale of import license is allowed. What are we looking into? We are looking into incomes not allowed. Okay, coming to gifts received. Gifts received is 24,000. Do we have an adjustment? There is an adjustment for gift received. What is mentioned? Gift received was given by a supplier for achieving target sale. So a supplier has given the gift to the business for achieving the target sales. As such, it is a gift that is related to business and hence it is allowed. Closing stock anyways is related to business, it is allowed and we have to account only for the undervaluation or overvaluation of the stock, closing stock. Okay, so there are no items when it comes to incomes not allowed but credited to P&L account. Okay, so this is 5,000 and nil, so this will be, this 5,000 should be, this is 5,000 and nil, so total is 5,000. Now this has to be deducted from 3,44,700. That comes to 3,39,700. The only thing now remaining is undervaluation and overvaluation of stock. The adjustment given is stock is undervalued by 10%. They have not mentioned which stock. That means both stocks are undervalued by 10%. Now what do you mean by undervaluation? You are showing less amount than what it is. Okay, you're showing less amount than what it is. Technically, opening stock should have been more. Okay, but they're showing it as less. Because they're showing less, the profits that are being shown over here are high. Since profits shown are high, you need to lower the profits. That means to say when opening stock is undervalued, you have to deduct. Okay, because the profits that are being shown are much higher than what actually it is. So less undervaluation of opening stock. Now, opposite holds true for closing stock. Now, what they have done, closing stock is an on the credit side and they have shown less than what it is. Because they're showing less than what it is, definitely the profits that are shown is much lesser. Okay, so closing stock has been undervalued. That means profits that are shown is much lesser. As such, we need to add undervaluation of stock. So add undervaluation of stock of sorry, closing stock. Now the reverse holds good for overvaluation. Okay, so value overvaluation of closing stock, and overvaluation of closing stock has to be deducted, and overvaluation of opening stock has to be added. Okay, so we don't have this. Overvaluation is not given in this problem. As such, this will be nil. Then the only thing that is now remaining is undervaluation of stock. So how much is it undervalued? Stock is undervalued by 10%. That means to say the figure that is shown over here is 90% of the actual price. Okay, so at 90% it is 1,20,000. Undervaluation is to the extent of 10,000. So I mean 10%. So for 10%, what will be the value? So how will you do it? Undervaluation for 1 lakh 90%, at 90% the value is 1,20,000. You need to check for 10% what will be the valuation. Okay, so 1,20,000 into 10 divided by 90. How much that comes to? 13,333. Coming to undervaluation of closing stock, same logic. Closing stock 10%. So this value is shown at 90%. So at 90% it is 2 lakh. For 10%, how much it will be? So at the rate of 90%, the value that is shown is 2 lakh, but it is undervalued. So 2 lakh into 10 divided by 90. So this will come to rupees 22,220. That's the undervaluation of closing stock. So we are done with almost all the adjustments, including undervaluation of opening stock and closing stock. So let us quickly find out the total. So here it is 13,333. Now this 13,333 has to be deducted from 3,39,700. So that comes to 3,26,367. And then this 22,222 has to be added. So if you are adding 22,222 to 3,26,367, we will get 3,48,589. This 3,48,589 is the total taxable profits of. Hope you all followed this problem, students. It's rather simple problem, and most of the provisions are being discussed in detail in the previous videos. Please check those videos and then start and then solve this particular problem, so you will understand this problem much better. That's all in this video. See you all in the next video. Thank you.